Hey, what's up, guys? Dan from Pekoe Mortgages, and today we had some breaking news. That's right, the Bank of Canada made their announcement, and it was a little bit, I guess, of a shock because most economists were predicting 0.75% or 75 basis points as an increase. We actually got a full 1%. So interest rates are going up by 1%, and they're already slightly high. But what this means for anyone that's got a variable rate mortgage or a home equity line of credit is that that's going to be going up. So let's first talk about how this affects you if you're going to get a mortgage. If you have an approval and you're working towards closing, this isn't going to affect you as far as your qualifying rate. But if you're looking to purchase right now and you haven't received an approval, you haven't put an offer on a property, your qualifying rate is going to change. Because as of today, that 5.25%, that stress test rate, is no longer effective. It's just take it off the table because it's not relevant. What's happening is that because variable rate mortgages have increased by 1%, the rules state we had to qualify you on the stress test of 5.25 or your contract rate plus 2%. So prior to today, people were qualifying you on 5.25% if you got a variable rate mortgage. Now that is going up, and the minimum is probably going to be around 5.7% as a qualifying. So that has real world implications as far as what you can afford. Let's say, for example, you had an insured mortgage, $500,000 purchase, minimum down payment. You're looking at about a $20,000 to $25,000 decrease in your affordability. So it's definitely going to affect things if you're in the market looking for a property. Now, if you've got a line of credit and you own a property right now, this is going to affect you too, because likely that line of credit is going to be at either prime plus 0.5% or prime plus 1%. So whatever prime was yesterday, it's going to change by a full 1%. So keep that in mind. Your next payment is going to be higher than what it is today. The other thing I want to talk about is dollars. What does this mean for anyone that has an existing variable rate mortgage? Well, let's take, for example, an insured mortgage where you had prime minus 1% as your discount. That would have been 2.7% yesterday. As of today, that's going to move up to 3.7%. What that means for your next payment is about a $52 increase for every $100,000 you borrow. Now, let's talk about what actually is going on. Are we going to be seeing a difference when it comes to your variable rate mortgage in the future? Is it continuing to go up? Maybe it's going to drop. Well, the Bank of Canada in today's announcement, I'm going to read it directly from the website. The Governing Council continues to judge that interest rates will need to rise further, and the pace of increase will be guided by the bank's ongoing assessment of the economy and inflation. This is important because this is the monetary tightening they're doing is essentially to kind of keep inflation in line. They have a target of 2% for that inflation. We're not close to that. In fact, yesterday, the feds in the U.S. announced that June's number for inflation was 9.1%. That's way off target. So it's not working. It's up 0.5% from the month before. If inflation continues at this pace, obviously, if you're doing the same thing, expecting different results, it's likely not going to happen. So if inflation continues to run out of control, we likely will see us slide into a recession. If we hit a recession, guess what? The monetary policy changes and likely we'll see interest rates drop. So it's one of those things I can't recommend one way or another what's going to happen because I don't have a crystal ball. But if you are in a variable rate mortgage and we do slip into a recession and interest rates do drop, then you're going to benefit from that because your rate will go down. Anyway, guys, if you have any questions on today's announcement or anything else, you want me to take a look at things, reach out to me. I'm here for you.